the raging mediocrity of the Trump administration is now, part of daily life. You raised an excellent point. Trickle-down theory, globalization. The Chinese buy in the neighborhood of, I think, $70 billion of components for all their gizmos from more than 13,000 companies in the United States. Globalization is real. What Trump is trying to do, since the day he got in, is turn it into global colonization with America in control. Now, here's a man who stands up and says, it's all part of the same weaponization of the dollar game plan, this colonization like the old East India Company. He stands up and he says, you American companies in China, come on back to the United States and do your manufacturing here. That's the talk of someone who didn't take economics in his junior year in high school. I mean, really, and it's not me. You can talk to any economist with PhDs and they'll tell you the same thing.
Mistake you made with the car industry.
Both sides will pay.
White House economic advisor Larry Kudlow admitted Sunday what nearly every economist knows to be true. The tariffs President Trump is imposing on Chinese goods imported into the U.S. are not solely paid for by the Chinese.
But it's U.S. businesses and U.S. consumers who pay, correct?
Yes, to some extent. Again, both sides will suffer on this.
On Friday, President Trump slapped a 25% tariff on approximately $200 billion worth of Chinese imports and is now ordering his trade representatives to start the paperwork to tariff an additional $300 billion. Basically everything China sends to the U.S., from cell phones to furniture. It's a fight the president says is worth having.
So our country can take in $120 billion a year in tariffs, paid for mostly by China, by the way, not by us.
Tariffs do make Chinese goods more expensive, which can hurt China's economy. But the actual tariffs are a tax paid by U.S. companies that import Chinese products. Companies can either take on those costs and make less money, or they raise prices on U.S. consumers, which is what often happens. But President Trump isn't just battling China on the world stage. He's also at war with Congress. Democrats have launched more than 20 separate investigations into President Trump, his actions as president, his personal finances, and his administration's policies.
The Democrats are more interested in subpoenas than solutions.
On Face the Nation, Republican House Minority Leader Kevin McCarthy criticized Democrats for what isn't getting done.
We want to move forward. We got health care. We got trade. We got a crisis on our border.
And while Democrats say they can multitask,
Don't think that we can't do both.
even on a bipartisan issue like infrastructure, so far there's been no concrete legislative progress.
So Ben Tracy joins us now from the White House. So Ben, China promised retaliation, and now we know what that retaliation looks like. $60 billion worth of U.S. goods going to be seeing increased tariffs?
I think this is actually a fairly measured response from China when you look at the numbers. They basically did what the U.S. did. They raised the tariff amount on the dollar amount that it was already being tariffed. So China had tariffs on $60 billion worth of U.S. goods. That goes back to the first round of this tariff fight last year. Instead of raising the dollar amount, they simply raised the tariff amount. In their minds, this might be a way of saving face without overly escalating this trade war with President Trump.
So we heard a little bit from White House economic advisor Larry Kudlow at the start of your piece there. He was on Fox News yesterday, and he repeatedly mentioned that the president could possibly be meeting with China's President Xi Jinping at the G20 summit, maybe sort of a sideline conversation, and that could maybe be a way out. The president has bragged, if you will, and put a lot of weight on the nature of his personal connections with world leaders, and he seems to get along with Xi. What's the White House saying about this strategy?
Well, it is interesting. I mean, President Trump, even during the last couple of days, has gone out of his way to say that he is still friends with President Xi, but he always makes the distinction that President Xi is looking out what is best for China, and President Trump says he is looking out for what is best for the U.S. But yes, both of these leaders will be at the G20 summit at the end of June in Osaka, Japan, and they likely will meet in some fashion. It's hard to imagine the two of them being able to sit down and hammer out a trade deal, though, if nothing else happens in the interim. I think what we're going to have to see now is further negotiations between both the U.S. side and the Chinese side. The Chinese have said that they have invited President Trump's trade negotiators to come back to Beijing for yet another round of talks. This will be the 12th round of trade talks to try to hammer something out. But if they're not close to a deal by the time the G20 summit happens, I can't imagine that President Trump and President Xi will sit down in a room and have that fall apart.
You know, Ben, when these trade tensions began, among the first people sort of hit the hardest were farmers. Especially soybean farmers. You know, a lot of people in the area of the country that supported President Trump. Is there a concern coming from the White House that as this trade war sort of ratchets up, that the people who supported President Trump will be hit the hardest, and the timing could have been worse as we sort of head towards the 2020 race?
Yeah, and I think you're seeing that in some of the tweets that President Trump is sending out, where he is going out of his way to say to people that these tariffs don't really impact American consumers or American businesses. That obviously is not true. Tariffs are a tax that are paid by U.S. businesses, by U.S. importers, and then those costs are often passed on to U.S. consumers in the form of higher prices. And you're right about farmers. They really have been hit the hardest so far in this trade battle. They were hit very hard the first time around, and these increased tariffs that we're now seeing from China are likely to be on agricultural products, because that is the main thing that we export to China. The real difference here is, you know, when you look at these numbers and you see that we now have tariffs on $250 billion worth of Chinese goods, and they only have tariffs on $60 billion. The reason for that disparity is because we simply don't sell as much stuff to China as they sell to us, so they don't have that dollar amount that they can tariff.
Yeah, I thought it was also interesting that, as you know, the president-elect has been making comments about imposing tariffs on China, and he frames it as this is a way for America to win. I thought it was interesting that the Chinese said this is a no-win situation for both the United States and for the Chinese.
Well, because China wants to sell their products to Americans, right? I mean, that's how a lot of these Chinese companies make a lot of money. And the United States also wants to have cheaply produced goods that then companies can sell to their consumers like you and me. And so, yes, President-elect Trump is saying, well, this is going to bring American jobs here. It's going to protect domestic industries. It's going to make any supply chain crisis a lot better for us if we're able to make more things in the United States. But it could also mean that higher prices you see when you go to Walmart or wherever, because so many of the goods that we buy right now are made in China, in Canada, in Mexico, in India, you name it.
What would come first? Would it be the benefits that the president-elect is saying would happen here, which in other words, hiring would go up? Or would it be we'd feel the pinch at the supermarkets when we buy anything? That would probably hurt us before we see the benefits of companies hiring more Americans. What do you say?
So if they are implemented, I do think you're going to see the prices go up before you see the jobs, because in order to have jobs come here, you need to have capacity in your manufacturing. All of those things take time. I don't want, though, to concern anyone. Don't go out and buy things that you can't afford right now, because you're not going to see the prices increase immediately. It would take some time to move through for you to see it as a consumer. That's if it's implemented, though, because, Vlad, we've talked about this before. This could be a negotiating tactic. The Canadian Prime Minister, the Mexican president have already come to the table and said, hey, let's talk things out. So the hope, I think, right now is that we would never see these tariffs go into effect. China, though, is a different story. I mean, we're already seeing that tit for tat.
I think the White House, to be honest, at this point doesn't really know exactly what's going to be announced. I've heard that a lot of these deliberations are taking place and Donald Trump is hearing from numerous advisors, but at the end of the day, it is he and he alone who will make that decision. Now, we have heard numerous different numbers. Some expect the tariffs to be lower than previously thought, around 10%. Some are expecting the 25% that Donald Trump has floated numerous times and also imposed on Canada and Mexico, albeit those tariffs delayed to what is now being dubbed Liberation Day here in the United States. In fact, just as we finished the end of business today, we heard from the White House saying, good night, everybody, and see you tomorrow. See you tomorrow. Happy Liberation Day Eve. So the White House really pushing this narrative. But of course, it is really worrying a lot of people that have to deal with the White House. And that is obviously the vast majority of the world who look to America as either some kind of trade ally or a defense ally. And this is a sweeping amount of tariffs that are expected to come in, affecting almost every country in the world. It must be said as well, the trade organization that's backing up this from the White House is not that well staffed, in the sense of it's nowhere near as fully staffed as it should be, especially, this soon into a term. They haven't really had time to vet people and to get them into those positions. So it's been a lot of work for the White House to go through this, but it's also a lot of work for the people on the other end of these tariffs to try to gauge how to react to these things and to gauge what their response should be. I've spoken to a couple of sources, and they've basically told me that it's going to depend what the tariffs are as to what their retaliation will be.
My fellow Americans, this is Liberation Day, waiting for a long time. April 2nd, 2025 will forever be remembered as the day American industry was reborn, the day America's destiny was reclaimed, and the day that we began to make America wealthy again. We're going to make it wealthy, good and wealthy. For decades, our country has been looted, pillaged, raped, and plundered by nations near and far, both friend and foe alike. American steel workers, auto workers, farmers, and skilled craftsmen. We have a lot of them here with us today. They really suffered gravely. They watched in anguish as foreign leaders have stolen our jobs, foreign cheaters have ransacked our factories, and foreign scavengers have torn apart our once beautiful American dream. We had an American dream that you don't hear so much about. You did 4 years ago, and you are now, but you don't too often, and for many years and decades even, you didn't hear too much about. Our country and its taxpayers have been ripped off for more than 50 years, but it is not going to happen anymore. It's not going to happen. In a few moments, I will sign a historic executive order instituting reciprocal tariffs on countries throughout the world. Reciprocal, that means they do it to us and we do it to them. Very simple, can't get any simpler than that. This is one of the most important days, in my opinion, in American history. It's our declaration of economic independence. For years, hardworking American citizens were forced to sit on the sidelines as other nations got rich and powerful, much of it at our expense. But now it's our turn to prosper, and in so doing, use trillions and trillions of dollars to reduce our taxes and pay down our national debt, and it'll all happen very quickly. With today's action, we are finally going to be able to make America great again, greater than ever before. Jobs and factories will come roaring back into our country, and you see it happening already. We will supercharge our domestic industrial base. We will pry open foreign markets and break down foreign trade barriers. And ultimately, more production at home will mean stronger competition and lower prices for consumers. This will be indeed the golden age of America. It's coming back. We're going to come back very strongly. We're pleased to be joined on this momentous occasion by Vice President J.D. Vance. J.D., thank you. Thank you. Thank you very much. Where are you, J.D.? No, that wasn't too hard to find. I was looking, he likes to take a low-key attitude, so usually we sit right in front. He's gaining a lot of confidence, Mike, isn't he? And nearly my entire cabinet is here, as well as Speaker Mike Johnson, who's done an amazing job. And with the great success we had last night in Florida, we have a majority of 7. And 7's like a lot when we had it at 1, right? You've done a fantastic job, and many of the members of the House and Senate are with us. Senators, congressmen, thank you all for being with us. We appreciate it. For decades, the United States slashed our trade barriers on other countries, while those nations placed massive tariffs on our products and created outrageous non-monetary barriers to decimate our industries. And in many cases, the non-monetary barriers were worse than the monetary ones. They manipulated their currencies, subsidized their exports, stole our intellectual property, imposed exorbitant VAT taxes to disadvantage our products, adopted unfair rules and technical standards, and created filthy pollution havens. They were absolutely filthy, but they always came to us and they said, we're violating, we should pay for it. It's all detailed in a very big report by the U.S. Trade Representative on foreign trade barriers, and I'll just hold it up for you. It's available, and you don't have to pay too much. As I understand it, you'll pay nothing. It's a lot of work for something, actually, because it's a special book. It's very, frankly, it's very upsetting when you read it, when you see what people have been doing to us for 30 years. This all happened with no response from the United States of America, none whatsoever. But those days are over. Let me offer just a few examples of the vicious attacks our workers have faced for so many years. The United States charges other countries only a 2.4 tariff on motorcycles. Meanwhile, Thailand and others are charging much higher prices, like 60%. India charges 70%. Vietnam charges 75%, and others are even higher than that. Likewise, until today, the United States has for decades charged a 2.5 tariff. Think of that, 2.5% on foreign-made automobiles. The European Union charges us more than 10% tariffs, and they have 20% VATs, much, much higher. India charges 70%, and perhaps worst of all are the non-monetary restrictions imposed by South Korea, Japan, and very many other nations. As a result of these colossal trade barriers, 81% of the cars in South Korea are made in South Korea. 94% of the cars in Japan are made in Japan. Toyota sells 1 million foreign-made automobiles into the United States, and General Motors sells almost none. Ford sells very little. None of our companies are allowed to go into other countries. And I say that, friend and foe, and in many cases the friend is worse than the foe in terms of trade. But such horrendous imbalances have devastated our industrial base and put our national security at risk. I don't blame these other countries at all for this calamity. I blame former presidents and past leaders who weren't doing their job. They let it happen, and they let it happen to an extent that nobody can even believe. That's why, effective at midnight, we will impose a 25% tariff on all foreign-made automobiles. Thank you. Brian, I'd like to have you come up here for a second, okay? I just see him sitting. He's been a fan of ours, and he understands this business a lot better than the economists, a lot better than anybody. Brian, say a few words, please, would you?
Thank you, Mr.
Thank you.
President.
It's a great honor to have you. Thanks.
Thank you, Mr. President. I grew up just north of Detroit, Michigan, in Macomb County, known as the home of the Reagan Democrats. My first vote for president was for Ronald Reagan. I thought that was going to be the best president I ever saw in my lifetime until Donald J. Trump came along. I have watched my entire life, I have watched plant after plant after plant in Detroit and in the metro Detroit area close. There are now plants sitting idle. There are now plants that are underutilized, and Donald Trump's policies are going to bring product back into those underutilized plants. There's going to be new investment. There's going to be new plants built. And the UAW members, and I brought 20 of them with me, they're sitting right over here. We support Donald Trump's policies on tariffs 100%. So, Mr. President, we can't thank you enough. And in 6 months or a year, we're going to begin to see the benefits. I can't wait to see what's happening 3 or 4 years down the road. Thank you, Mr. President.
Thank you so much. Thank What a great guy. He got it right from the beginning. He got it before almost anybody else. This group over there, they got it too. And, you know, we won the state of Michigan. We won almost all of them. But we won Michigan by a lot, and I want to just thank you all. The auto workers were fantastic. The Teamsters were fantastic. Everyone was pretty good, I will tell you. Thank you very much. I appreciate it. You're going to be very happy very soon, and you probably see what's happening with all of the, not only car companies, but car companies in particular. You see it with all of the ones they're moving, they're announcing day in, day out. You're seeing it. Nobody's ever seen anything like that. With today's actions, we're also standing up for our great farmers and ranchers who are brutalized by nations all over the world. It's brutalized. Canada, by the way, imposes a 250 to 300% tariff on many of our dairy products. They do the first can of milk. They do the first little carton of milk at a very low price, but after that it gets bad, and then it gets up to 275, 300%. So when they're figuring what's Canada charging, they say, oh, about 2%, 3%. But take a look at what happens down the road. When you look a little bit, it's not a pretty picture, and we don't like it, and it's not fair. It's not fair to our farmers. It's not fair to our country. And with countries like Canada, you know, we subsidize a lot of countries and keep them going and keep them in business. In the case of Mexico, it's $300 billion a year. In the case of Canada, it's close to $200 billion a year. And I say, why are we doing this? Why are we doing this? I mean, at what point do we say you got to work for yourselves, and you got to? This is why we have the big deficits. This is why we have that amount of debt that's been placed on our heads over the last number of years, and we're really not taking it anymore. Through non-tariff barriers, the European Union bans imports of most American poultry. You understand? They say, we want to send you our cars, we want to send you everything, but we're not going to take anything that you have. Australia bans, and they're wonderful people and wonderful everything, but they ban American beef, yet we imported $3 billion of Australian beef from them just last year alone. They won't take any of our beef. They don't want it because they don't want it to affect their farmers. And you know what? I don't blame them, but we're doing the same thing right now, starting about midnight tonight, I would say. And China charges American rice farmers an overquota, it's called, a tariff rate of 65%. South Korea charges 50%. Actually, they charge different, from 50% to 513%. And Japan, our friend, charges us 700%. But that's because they don't want us selling rice, another thing. Who can blame them, Madam Secretary? Agriculture, great job you did on eggs, by the way. The egg prices came down 50%. You got them down 50% once we got involved. They were going through the sky. The egg prices, they were going through the sky, and you did a fantastic job. Now we have lots of eggs, and they're much cheaper, down about 59% now, and they're going down further. We charge 2.8% for so many things that other countries are charging 200%, 300%, and 400% for. If imposing tariffs and protective barriers made nations poor, then every country on earth would be racing to eliminate these policies, and China would be the first on line. They run a very strong country, but they're not first in line, and the American people are paying a very big price. From 1789 to 1913, we were a tariff-backed nation, and the United States was proportionately the wealthiest it has ever been. So wealthy, in fact, that in the 1880s, they established a commission to decide what they were going to do with the vast sums of money they were collecting. We were collecting so much money so fast, we didn't know what to do with it. Isn't that a nice problem to have? What do you think, Marco? Good problem? Marco would love that problem. But we don't have that problem anymore, but we're not going to have it very much longer, I will tell you. But they collected so much money, they actually formed a commission to determine what they were going to do with the money, who they were going to give it to, and how much. Then in 1913, for reasons unknown to mankind, they established the income tax so that citizens, rather than foreign countries, would start paying the money necessary to run our government. Then in 1929, it all came to a very abrupt end with the Great Depression, and it would have never happened if they had stayed with the tariff policy. It would have been a much different story. They tried to bring back tariffs to save our country, but it was gone. It was gone. It was too late. Nothing could have been done. It took years and years to get out of that depression, far longer than even FDR had that office right over there for a long period of time. The ramp system, that's rather intricate, was built because of him, and every time you walk up, you think of him, and he did a great job in many ways, but it lasted long beyond his terms, as you know. But it's not too late any longer, and we're going to start being smart, and we're going to start being very wealthy again. We're going to be wealthy as a country because they've taken so much of our wealth away from us. We're not going to let that happen. We truly can be very wealthy. We can be so much wealthier than any country. It's not even believable, but we're getting smart. Nearly a century later, in the face of unrelenting economic warfare, the United States can no longer continue with a policy of unilateral economic surrender. We cannot pay the deficits of Canada, Mexico, and so many other countries. We used to do it. We can't do it anymore. We take care of countries all over the world. We pay for their military. We pay for everything they have to pay, and then when you want to cut back a little bit, they get upset that you're not taking care of them any longer. But we have to take care of our people, and we're going to take care of our people first, and I'm sorry to say that. And today we're standing up for the American worker, and we are finally putting America first. In sleepy Joe Biden's last year in office, the United States hemorrhaged 100,000 manufacturing jobs, and the number was going through the roof at levels never seen before. And our trade deficit reached a record $1.2 trillion, which is unheard of. Since the beginning of NAFTA, the worst trade deal ever made, it was a horror show. I was able to terminate it. They all said you'd never be able to get it out. We had to get approval from Congress to get it terminated. We had to live with that deal. It was the worst trade deal ever made by far. But since the very beginning of NAFTA, our country lost 90,000 factories. Think of what that is, 90,000. Think about putting a map up and putting tax on it. You wouldn't have enough room. 90,000. I said, is that possible? We had it checked 4 different times, and it was actually somewhat higher than that. And 5 million manufacturing jobs were lost while racking up trade deficits of $19 trillion. That was the worst trade deal ever made. As a result of these gigantic losses, foreign nations now own $26 trillion more of American assets than the Americans own of their own foreign assets or other foreign assets. The United States can no longer produce enough antibiotics to treat our sick. We have a tremendous problem. We have to go to foreign countries to treat our sick. If anything ever happened from a war standpoint, we wouldn't be able to do it. We import virtually all of our computers, phones, televisions, and electronics. We used to dominate the field, and now we import it all from different countries. A single shipyard in China now produces more ships every year than all of the American shipyards combined. Think of that. And it was a business that we used to dominate. We used to dominate it totally. In short, chronic trade deficits are no longer merely an economic problem. They're a national emergency that threatens our security and our very way of life. It's a very great threat to our country. And for these reasons, starting tomorrow, the United States will implement reciprocal tariffs on other nations. It's been a long time since we even thought of that. We used to think about it a lot. We didn't think about it for many decades, and you see what's happened. For nations that treat us badly, we will calculate the combined rate of all their tariffs, non-monetary barriers, and other forms of cheating. And because we are being very kind, we're kind people, very kind. You're not so kind when you got ripped off with your salaries. My auto worker friends and my Teamster friends and all of the unions that typically voted Democrat, they're not voting Democrat anymore because worker, whether union or non-worker, they're for the Republicans now. That's what happened. But we will charge them approximately half of what they are and have been charging us. So The tariffs will be not a full reciprocal. I could have done that, yes, but it would have been tough for a lot of countries who didn't want to do that. I'd like to see the chart if you have it. Could you bring it up, Howard? This is our great Secretary of Commerce, Howard Lutnick. Thanks, Howard. So if you look at that, China, first row, China, 67%. That's tariffs charged to the USA, including currency manipulation and trade barriers. So 67%, I think you can, for the most part, see it. Those with good eyes, with bad eyes. We didn't want to bring, it's very windy out here. We didn't want to bring out the big charts because it had no chance of standing. Fortunately, we came armed with a little smaller chart. So 67%, so we're going to be charging a discounted reciprocal tariff of 34%. I think, in other words, they charge us, we charge them less. So how can anybody be upset? They will be, because we never charge anybody anything, but now we're going to charge. European Union, they're very tough, very, very tough traders. You know, you think of European Union, very friendly. They rip us off. It's so sad to see. It's so pathetic. 39%, we're going to charge them 20%, so we're charging them essentially half. Vietnam, great negotiators, great people. They like me, I like them. The problem is they charge us 90%. We're going to charge them 46% tariff. Taiwan, where they took all of our computer chips and semiconductors. We used to be the king, right? We were everything. We had all of it. Now we have almost none of it, except the biggest company is coming in. We're going to end up with almost 40%. Lee Zeldin's working to get their approvals. And it's an amazing company. Mr. Wei, of one of the great companies of the world, actually. They're coming in from Taiwan, and they're going to build one of the biggest plants in the world, maybe the biggest for that. But 64%, we're going to charge them 32%. Japan, very, very tough, great people. And again, I don't blame the people for doing it. I think they're very smart in doing it. I blame the people that sat right in that Oval Office, right over there, right behind the Resolute desk or whichever desk they chose. Japan, 46%. They would charge us 46%, and much higher for certain items like cars, you know, little items like cars. 46%, we're charging them 24%. India, very, very tough, very, very tough. The Prime Minister just left. He's a great friend of mine, but I said, you're a friend of mine, but you're not treating us right. They charge us 52%. You have to understand, we charge them almost nothing for years and years and decades. And it was only 7 years ago when I came in, we started with China and charged them. We took in hundreds of billions of dollars from China in tariffs. And they understood, honestly. President Xi understood. He said, look, I understand. And the other countries, and they all understand. We're going to have to go through a little tough love, maybe, but they all understand. They're ripping us off, and they understood it. Prime Minister of Japan, Shinzo Abe. He was a fantastic man. He was unfortunately taken from us, assassination. But I went to him and I said, Shinzo, we have to do something. A trade is not fair. He said, I know that, I know that. And he was a great gentleman. He was a fantastic man, but he understood immediately what I was talking about. I said, Shinzo, we have to do something. He said, I know that. And we worked out a deal, and it would have been a much better deal, but frankly, there were many years left on the deal that was made previous to my getting there, but it was something. If you look at Switzerland, 61% to 31%. Indonesia, Malaysia, Cambodia. Oh, look at Cambodia, 97%. We're going to bring it down to 49. They made a fortune with the United States of America. United Kingdom, 10%, and we'll go 10%. So we'll do the same thing. South Africa, 60%, 30%, and they've got some bad things going on in South Africa. You know, we're paying them billions of dollars, and we cut the funding because a lot of bad things are happening in South Africa. The fake news ought to be looking at it. They don't want to report it. Brazil, 10%, 10%. Bangladesh is 74%. So you see what's going on. Pakistan, 58%. Sri Lanka, 88%. So what we're doing is we're taking Not the full. We could take the full 88%. Thanks a lot, Harold. He's doing a very good job. How's he doing, all right? I think you better take it with you. It's not going to last very long. He's going to put it, it's going to follow you down with the wind. I brought a hat just in case it got too windy, but here, would anybody like a hat? I'm not giving it to a cabinet. I'm giving it to the auto workers. Come here. Thank you, fellas. Get it. That's it. That's it. They deserve it more than our cabinet. Our cabinet has plenty of hats. But you see the numbers. The numbers are so disproportionate. They're so unfair. At the same time, we will establish a minimum baseline tariff of 10%. You notice that on the chart. And that'll be on other countries to help rebuild our economy and to prevent cheating. So we're going to have a minimum of cheating, and we're going to be very severe on the people that at the gate that watch the tariffs and watch the product coming in, because there's been a lot of bad things happening at the gate because the money is so enormous that you're talking about. There's never been probably anything like it in terms of the enormity, and there are a lot of bad things happen at the people that do the check-in, and they're looking at 10-year jail sentences if they do play. We're going to treat them so good, but if they cheat, the repercussions are going to be extremely strong. Foreign nations will finally be asked to pay for the privilege of access to our market, the biggest market in the world. We're right now the biggest market in the world. We had a great country 4 years ago in terms of the economics. We were doubling up on China. We were doing so well. Nobody was going to catch us, but so much of it slipped away over the last 4 years under Biden. I campaigned on this policy throughout last year, and today that promise was made, and it was also a promise, as you know, that was kept. Promises made, promises kept.
European stock markets have opened slightly higher in the past hour. The main indexes in the UK, Germany, Spain and France all gained between 0.3 and 0.7%. On Thursday, they registered their steepest one-day percentage gain since 2022. The news wasn't so positive across Asia. Uncertainty about President Trump's tariffs again affecting markets there. Japan's Nikkei closed nearly 3% lower. Many investors are turning to gold, considered a safe investment. Its price hit a record high on Friday there. The trade war between the world's two largest economies, the US and China, has intensified, with Washington confirming taxes of up to 145% on Beijing, which has responded with 84% tariffs of its own. And some breaking news coming in from Beijing now, where Stephen McDonald was speaking to us from, which is that the government is to raise additional tariffs on US goods to 125%. So initially, it had talks of tariffs of 84%. The update now from the Chinese government is that it's going to raise tariffs on US goods to 125%.
Now, China says it will raise tariffs on US goods to 125%, an escalation of the trade war between the world's two biggest economies. Donald Trump's latest tariff on China is 145%, a move Beijing has described as trade blackmail.
We begin with breaking news. China has just raised its tariffs against the US from 84% to 125% starting on Saturday. Beijing says it will ignore any further tariff hikes from Washington. Now, the news sent European stocks plummeting, and these are live pictures from the Frankfurt Stock Exchange of Germany's DAX stock index. The day had started optimistically for investors before Beijing's announcement, and the United Nations Trade Agency has said the tariffs will have a catastrophic impact on developing nations. China says the US should bear full responsibility for the global economic turbulence.
We're bringing you some breaking news out of China, and we're just hearing that China has just announced more tariffs on US goods to come into effect on Saturday. So the finance ministry says the rate will be raised from 84% to 125%. This is just the latest salvo in a growing trade war between the world's two largest economies. That news from the Chinese finance ministry comes a day after Washington clarified that its tariffs on imports from China now sit at 145%. Beijing has been urging the Trump administration to return to what it calls fair dialogue. And concerns over the trade war have already sent markets tumbling again in Asia and the U.S. Take a look at Japan's Nikkei index. It closed Friday's session down 3%. And in China, the Shanghai Composite Index remained steady. On Wall Street, the S&P 500 closed 3.5% down on Thursday.
China announced fresh trade countermeasures on Friday. Beijing said it's hiking tariffs on imports of U.S. goods to 125% from 84%. The new rate takes effect Saturday. The U.S. and China have been escalating their trade war by raising tariffs, even as President Donald Trump hit pause on tariffs for other countries. Trump's universal tariffs on China now total 145%. That's because when Trump announced earlier this week that China faced 125% tariffs, he didn't include a 20% tariff rate tied to China's role in production of fentanyl. In announcing the tariffs, a Chinese finance ministry spokesman accused the U.S. of a numbers game, which has no practical economic significance.
All eyes are on the markets once again this morning after a very unstable week on Wall Street.
Yesterday, U.S. stocks surrendered a huge chunk of Wednesday's historic gains due to President Trump's plans to increase import taxes on Chinese goods from 125% to 145%. And now China just announced it's raising tariffs on U.S. goods from 84% to 125% starting tomorrow. Democrats have been critical of the president's rapidly changing tariff policy, but he says, the president that is, that he's happy with the direction the country is going in.
Doing very well. It's been amazing. We had a big day yesterday. There'll always be transition difficulty, but we had in history, it was the biggest day in history, the markets. So we're very, very happy with the way the country is running.
Anybody who traded in the last 48 hours and made an incredible amount of money prior to this tariff announcement, who sits right there in that house, needs to answer for it.
China says it's willing to fight to the end when it comes to tariffs and has been reaching out to other countries attempting to strike deals of its own.
I think trade between the two is pretty much obliterated quite a few days ago. We get to this stage where the numbers don't make a huge amount of difference in terms of the real world impacts. And actually, that's what China pointed to today. Look, today's retaliation is predictable in a sense. Yes, it escalates things, but it does so within relatively predictable parameters. All the way through this trade war, China has wanted to be seen to retaliate, but it's wanted to retaliate to sort of match what Donald Trump has done. And thus is exactly what's happened today. Donald Trump raised things to 125% on Wednesday, and here we are, 125% from China today. The thing that makes China's response today a little different is something that it added in the statement that was put out from the State Council. And in that, it said that at this stage, we're just playing, quote, a numbers game. Essentially, that once you get beyond a certain level, trade has all but ceased anyway, and the numbers don't make all that much difference, whether it's 100%, 200%, 500%, and so on. So China has very specifically said that if Trump raises tariffs further, they will not respond. So a big question about whether they will be able to sort of successfully force something of a stalemate here. It's possible that Trump might want to be seen to have the last word, potentially sort of nominally put up his tariff number again. But the Chinese have said they won't respond. And if they don't, and if that's where we are at, there's something of a truce. And the question then is, within that truce, is it possible that the two sides could come to the negotiating table? The other option is that Trump takes some sort of other measure that really raises the stakes, perhaps moving beyond the tariff trade arena, perhaps some sort of quite punitive economic measure, perhaps something political. If he was to do that, China's made it pretty clear in what they've said today that they would retaliate to that. But of course, if you're in a sort of a tit-for-tat move over more geopolitical issues, then it's sort of much more perilous potential situation.
Obviously, the trade war between the world's two biggest economies has been escalating every day, but this is the latest twist. Beijing raising its retaliatory tariffs to over 100%, basically meaning that any companies having to import would have to pay more than double. So many analysts have been telling us that these tariffs are so high that it's almost impossible for any businesses making products and trying to sell them in each other's countries to make a profit. So I think it's fair to say that the damage to bilateral trade between the world's two biggest economies is pretty much almost done. The question has been among investors whether Beijing would resort to other measures to retaliate. There are, of course, extreme measures as well as not so extreme measures. There were rumors of Beijing possibly banning the imports, for example, of Hollywood movies. So we'll continue to monitor whether there will be other measures as well. But definitely this is further escalation of the trade tension, and it'll be interesting to see how those European markets, which, as you said, have opened flat to higher, will react to it. Many analysts were saying that Beijing wouldn't want to be seen to be the weak one in this trade war, and therefore they would not back down. Some were also saying that when the Chinese government starts quoting Mao Zedong, that really shows that they're not going to back down. They're going to fight this trade war to the end, as they have said previously. And I think even if they were to sit at that negotiating table in the near future, some analysts were saying that they would try their best to damage the US economy before they actually get to that negotiating table, so they can start at a much stronger position. So maybe that's what we're seeing at the moment. And of course, Asia and global stock markets have been reacting to all these latest twist and turn in this trade war, especially between the world's two biggest economies. And it has been an incredibly volatile week for Asian markets. Of course, they have mostly closed for trading today. We saw some losses, even more. Japan's Nikkei 225, as you said, ending the day about 3% lower, though some markets like Taiwan, which was one of the biggest losers, they actually managed to rise. So it's not as a sharp sell-off that we saw earlier in the week, but there have been quite a lot of wild swings in the stock market.
China saying when it did this, a spokesman saying that basically the U.S. has violated the norms of trade, continues to do that, and that it felt obliged then to further raise tariffs to match it. Interestingly, it also said, the spokesman said that there would be no further attempts to match U.S. tariff hikes bit by bit. It called the whole process a joke, and so suggested that this might be the last hike that we see from the Chinese side. Interestingly, I have here, he also, the spokesman also said that China took credit, essentially, or he took credit for, China took credit, I should say, for Trump's decision to put that pause on the other tariffs, saying that it was their pressure that had essentially put so much strain on the U.S. economy and that forced Trump to step back. So you see this kind of gamesmanship coming in, this willingness to push and say, look, we're willing to go mano a mano here, and that's, I think, why you're seeing those shares drop.
Now, analysts reckon the US packs a bigger punch, but that China can take it on the chin. How do you see that?
I mean, in one way, sure, right? This is a producer-consumer relationship. China is the world's biggest producer, and the U.S. has been the world's economic consumer. I mean, it consumes everything, and particularly from China. So the common logic is that if we just stop buying, on the one hand, then the other side stops producing, and they have to find places to send all that. China can take it on the chin in the sense that it's not going to feel as acute a pain as probably the U.S. has felt, is feeling right now, and will continue to feel if things continue to go as they are. They are going to feel pain, of course. Don't get me wrong. There are tons of exports that they have to find a home for. If they can't bring in revenues and foreign revenues through those exports, and especially U.S. dollars, that presents their own problems with their currency. If they lower their currency as a result, that presents internal domestic problems. They're an economy also like the U.S. largely propped up on debt in many places. If that starts to sort of wobble, that can be a problem. But for the U.S., it's a democratically elected administration there, and a lot of them are invested in the stock market. They don't want to see the turmoil that's going on right now. And when you talk about a global recession, and especially when you talk about confidence in the dollar falling and the value of the dollar falling, they're getting nervous. So in that ways, the U.S. is vulnerable.
Mr. Trump told his cabinet on Thursday that a period of difficult transition was inevitable, but insisted investors were happy.
We had a big day yesterday. There'll always be transition difficulty, but we had in history, it was the biggest day in history, the markets. So we're very, very happy with the way the country's running. We think we're in very good shape. We think we're doing very well. Again, there'll be a transition cost and transition problems, but in the end, it's going to be a beautiful thing.
Donald Trump has now said that actually the tariff on Chinese goods is at 145%. The reason we're not going to get much of a response from the Chinese government to this is that at this point it doesn't matter. You know, once you go past 100% tariffs on Chinese goods, it could be 200%, it could be 300%. It's all the same because you pass 100% and it's already prohibitively high in terms of China selling goods into the US. So what this is seen as here is just a bit of bluster from Donald Trump. You know, he's stamping his feet because Xi Jinping won't talk to him. Well, guess what Xi Jinping is doing while he's ignoring Donald Trump? Today, he sat down with the Spanish Prime Minister, Pedro Sanchez. Next week, he travels to Malaysia, Cambodia, and Vietnam. These are all countries hit hard by Donald Trump's tariffs. You've got China's Commerce Minister speaking to their opposite numbers in South Africa and Saudi Arabia. We've got the Indian ambassador speaking to Vice Premier here, also talking about China-India relations. And on top of this, China and the EU are apparently in talks to remove tariffs on Chinese cars going into Europe and replacing this with a sort of base price instead. What this all shows you is that China has options. And really, Donald Trump has misled his followers by saying, all I got to do is whack these tariffs on China and Beijing will cave in a heartbeat. Well, I think the Chinese government has shown that is not going to happen.
I think this is really gets silly and a bit also unnecessary. I mean, U.S. has been imposing tariff again and again and again, and without really seeking dialogues and talking with the counterparty in China. And I think China, as you mentioned, being the second largest economy, they have to respond just to to show that they are not very happy with this. But I think on the other hand, the Chinese government already mentioned they are still keeping the door open. And the Minister of Commerce spokesperson said yesterday the negotiated door is still open, and then they hope that rationale will prevail and we'll come back to the negotiated table, because it makes no sense. I mean, U.S. government officials, many of them have said repeatedly that they don't want to decouple, they don't want to, that stop the development of China. So we see this kind of a tariff hiking is really serving that opposite. So I really hope that both sides can come down and we can come to some reasonable talks.
We know that China is home to around half of Amazon. If you look at a company like Amazon, China is home to half of Amazon sellers with over 100,000 Amazon businesses who are registered there. How big a blow are these tariffs for e-commerce businesses?
Well, it's an enormous blow. I mean, I really think this is hurting U.S. business as well. Of course, hurting Chinese too. But remember, there are 73,000 U.S. companies invest in China in the last several decades. And now you can imagine, for example, Apple, export 80-90% of Apple products out of China. I'm sure that's going to be levied on this kind of tariff. And Tesla, half of Tesla's cars export out of China. Again, you're going to have this kind of impact as well. And Walmart purchased 60% of all its supplies from China. Of course, on e-commerce and digital as well. So I really think this is really foolish and childish sometimes. And it's like a poker game now. It's really not necessary. I would think, we should sit down and talk and discuss issues that we felt. For example, U.S. government officials said on the issue of fentanyl. I mean, there's 20% right there, and I think China has already done a lot of things there. The former Secretary of State Department of U.S. who is in charge of a fentanyl discussion at the Biden administration, wrote an op-ed recently saying that China's government was very cooperative and to fight the fentanyl. And of course, the death rate of fentanyl in the U.S. last year dropped to 27%. So I think there's things can be done and talk and collaborate. So what we need more official visit. If U.S. initially launched this trade war, I think like the first term, I remember Lighthizer, Mnuchin, they come to China many times, and same for Chinese officials too. So let's start a visit. U.S. Commerce Secretary or Finance Secretary.
Right.
We don't even have a U.S. ambassador in China, so we need that dialogue.
Tariffs on China could get as high as 245%. That is your top DC Daily headline for April 16. Breaking overnight, tariffs on China could jump as high as 245%. A White House fact sheet on Wednesday says the new hike is in response to China's retaliatory tariff of 125%. China has said it would not increase tariffs again, even if the United States does, posting this morning, quote, China remains committed to joining hands, not throwing punches. President Trump also hinting that phones and electronics may not be exempt from tariffs after all. Small imports will also be tariffed starting May 2nd, the president closing a loophole that had allowed imports less than $800 to be tariff exempt.
Trade tensions between the United States and China continue to mount. In the latest, the U.S. announced 245% tariffs on Chinese imports. This means that a dollar product in the U.S. will now cost $3.45 in China. This further complicates the already strained ties between the two nations. This comes as Hong Kong post-announced suspension of goods mail services to the United States, effective immediately for sea mail and from April 27 for air mail. Hong Kong Post has sharply criticized these tariff hikes, calling them unreasonable and bullying. The agency has made it clear that it will not collect U.S. tariffs on behalf of the U.S. government. However, mail containing only documents will remain unaffected. This suspension highlights the escalating trade rift as Hong Kong now faces the same tariffs as mainland China. This comes after losing its special status under U.S. law following Beijing's imposition of a national security law in 2020. Meanwhile, China has also instructed domestic airlines to suspend the purchase and delivery of Boeing aircraft and related aviation components from the U.S. The decision is expected to impact American suppliers significantly. Chinese carriers seek government support to cope with the rising costs of leased jets. Although high-end tech goods like smartphones, semiconductors, and computers were early exempted by the US, the aviation sector remains deeply affected. Boeing's market value has already declined by 7% since January. The ripple effects of the tariff war are being felt across sectors. The US tourism industry recorded an 11.6% year-on-year decline in international visits this March, a trend travel analysts are calling the Trump slump. Airlines, including Delta, have adjusted operations in response to falling bookings and policy uncertainty. Meanwhile, tech giants are taking preemptive action. Apple, in a high-stakes logistical move, airlifted $2 billion worth of iPhones from India to the US to avoid shipping delays and potential tariff complications. The company joins a growing list of manufacturers overhauling global supply chains to stay ahead of disruptions. As trade tensions escalate, businesses are recalibrating operations, while geopolitical uncertainty continues to weigh on investor sentiment and cross-border commerce.
The number is so outrageous, it's very hard to believe, because numbers this high just start to lose all meaning.
245% tariffs on Chinese imports.
Because escalating US tariffs from 10% to 20, then to 54, then to 104, then to 145, and now presumably to 245. That's for all intents and purposes only a few steps away from declaring infinity tariffs, to which the only rational reply is to say, oh yeah? Well then we're tariffing you infinity plus 1. But even a mind-boggling 245% tariff on Chinese goods, if true, it would mean more than tripling the cost on everything that comes into the United States from China, which, for businesses who might spend months or years building reliable supply chains, would represent a seismic overnight shift. So you can understand the fear factor here. And considering the US bought close to $500 billion worth of Chinese goods last year, well, that's a major line item that just got a whole lot bigger, right? But it's not entirely true. Don't get me wrong, 245% is a real tariff applied by the US on China, just not in the way people thought. China now faces up to a 245% tariff on imports to the United States as a result of its retaliatory actions. A tariff this high would make trade with China very difficult.
It would be more than enough over time to pretty much bring trade to a halt.
But as debilitating a move a 245% tariff on Chinese goods would be, it fits into a pattern, right?
Imposing punishing tariffs on Canada, China, and Mexico.
China retaliated immediately, a 15% tax on U.S. coal, 10% on U.S. crude oil.
A 34% tax on imports from China.
34% that takes effect on all U.S. goods.
Additional 50% retaliatory tariff on China.
Retaliatory tariffs of 84%.
Tariffs on China to 145%.
Tariffs on American goods to 125%.
In this protracted back and forth, China would have the final word, hitting back with that 125% tariff, but also issuing a statement. Even if the U.S. continues to impose even higher tariffs, it would no longer have any economic significance and would go down as a joke in the history of world economics. If the U.S. continues to play a numbers game with tariffs, China will not respond.